Sudeep, if I had to ask you as to what the sector, which is one of that sector which is poised for a bit of a re-rating this year and de-rating this year, what would be your bets?
Which hasn't really seen too much of excitement is the BFSI. Yes, we have seen sharp correction in some of the segments of BFSI in the recent past, particularly the microfinance lenders. But overall, we believe that the insurance sector deserves probably a re-rating. We also believe that some of the gold loan companies deserve a re-rating. Some of the banks, I think they're performing exceedingly well and they deserve some kind of valuation upgrade. So, these are one single pocket where the largest potential exists is what we believe in Sambat 2081. Apart from that, there are, multiple, pockets. Let's say in the construction infrastructure space, we believe that Larsen deserves a re-rating. I just saw the chart being put out, Gravita, the recycling industry. I think there the environmental consciousness world over is increasing. And again, yes, there has been a couple of re-rating, but further re-rating is possible considering they have entered the European market and the opportunities in Europe are humongous.
Right, okay, that's that in Gravita. But Sudeep, other than that, where is it that you've been shopping in the current decline or not yet?
From the sidelines mostly. Little bit of nibbling in some of the stocks I mentioned, insurance segment, recycling, as well as construction infrastructure I have been. But beyond that, I've been watching. I think the way we are looking at the market, we believe the volatility will continue for the next few weeks. There are too many events lined up. There is a US election. There is, Maharashtra state election, which is definitely important in overall context of the markets. And of course, what's happening in the Gulf, what's happening in between Russia, Ukraine, and the flip-flop in China about incentives or no incentives, what kind of incentives, what kind of stimulus to be given. So I think there is a bit of a volatility, there is a bit of a uncertainty all around us. So I don't see too much happening in the next few weeks. So I will rather wait and watch instead of start buying in a big way now.
Not buying in a big way just yet, but just nibbling in. But let's talk about the November seasonality as well. Traditionally, what is it that we've seen and observed in the month of November? Samit is here with all the analytics. Samit?
Well, if you look at the last 10 years of the month of November for the main indices, the Nifty has closed in green 6 times, while the remaining 4 times it has ended in the red. While the average returns over the last 10 years have been around 2% when it comes to the Nifty 50 index, which is the benchmark index. When it comes to the Nifty mid-cap index, in fact, the broader market, that is the mid-cap and the small-cap, have performed better in the month of November because they have both closed in the green 8 times out of the last 10 Novembers, and the average return when it comes to the Nifty mid-cap and the small-cap indices have been around 3%. Now, if you look at the sectoral indices, is the Nifty Bank, Nifty Media and the Nifty PSU Bank Index, which have performed the best because they have closed in green nearly 8 times out of the last 10 times, while the average returns have been around 2 to 6% for these 3 indices. When it comes to Nifty FMCG, Nifty Financials, Nifty IT, Nifty Private Bank and Nifty Real Estate Index, these indices have closed in green 7 out of the last 10 times, while the average returns have been anywhere close to 2 to 4%. And when it comes to Nifty Auto, Nifty Metal, Nifty Energy and the Nifty MNC Index, they have closed in green around 5 times out of the last 10 times, while the average returns have been around 2 to 3%. And the least in the in the sectoral indices is the Nifty Pharma and the Nifty CPSC Index, which have closed in green just 4 out of the last 10 times, and the average returns for the Nifty Pharma have been negative 0.6%, while the Nifty CPSA index on an average basis has been flat in the month of November. Now, this is the most interesting part where we have considered the stocks that have closed in green most times in the month of November. Nifty now in the stock list, it's Tata.com and Persistent, which have closed in green nearly 9 out of the last 10 times, and the average returns have been around 6 to 7%. Then there is Birla Soft, Apollo Hospitals, SBI, IndusInd Bank and Biocon, which have closed in green 8 out of the last 10 times, while the average returns have been anywhere close to 5 to 7%. Now, a couple of stocks that we also need to keep an eye out for from the negative side of the market, and that's UPL, Cipla and SBI Card. Now, SBI Card has never closed in green in the month of November, while UPL and Cipla have closed in green around 2 to 3 odd times. Now, the average decline for SBI Card in the month of November has been around 3 odd%, while that for Cipla and UPL have been close to 2 to 3 odd%.
Okay, point taken. So that's the November seasonality for you, which is expected to perhaps creep in, and let's see which way it goes. AB Capital reported its numbers, and that stock is reacting positively at the moment. So let's pull up the intraday chart of that one. The profitability has come in at close to 1,000 crores, so that's one stock to watch out for. And the other one that I'm looking at is Tata Chemicals. Kunal, on the charts, AB Capital, Tata Chemical, any view?
So both of them are attractive. AP Capital is something which I've been recommending over the last few months. The stock has done reasonably well from 160 to at a point where the stock was almost at 220, 240. Now it's come back to that 215 to 220 mark, which means it should be good for a breakout back again above the 220 levels. So maybe we can wait out for a day or a couple of days before the stock breaks past about the 220 levels. That could be a strong breakout move for AP Capital yet again. For Tata Chemical, I think could be a very interesting move because the stock for the last 2 years, 3 years was trading into a range 1000 approximately as a support for the stock and 1100 to 1200 as a major resistance zone for Tata Chemicals. There have been, I think, very recent attempts for the stock to try and scale past about the 1200 mark, but it's met with a lot of supply as well as resistance. But the way the indicators have started to slope up higher for Tata Chemicals on the daily charts, the weekly charts, gives a sense that maybe the stock is getting ready for a breakout on the upside. So either as a breakout, we can look out for 1200 as a breakout play for Tata Chemicals, or in the anticipation, I think even at current levels of 1130, it could be a very good buy.
Okay, that's the take on some of those interesting names there. Concord, look out for that one. We were chatting with the management as well earlier in the day. 4% higher after reacting to its numbers. Marico as well looking up by about 4%. There's Escorts, which is also higher by 3.6% as we speak right now. Reliance relatively tempered. About a 0.4% kind of uptick is what you've seen on this particular stock. Other than that, of course, it's pretty quiet for a Bharti, for a TCS, flat for Tata Motors as well. And some of the metal names are the ones which are actually seeing a little bit of weakness. So Tata Steel, Hindalco, those are names which are actually laggards in right now's trading session. But let's also hear it out from Ravi Dharamshi. Investors clearly still seem to be wary going into this ongoing correction in the market. But is this a routine clean-up or cause for worry? Hear out what Ravi's opinion was.
Because of just the sheer magnitude of the returns, we should temper our expectation in terms of what kind of returns we should expect. And we don't talk in terms of 12 months, we talk in terms of 3 to 5 years. Can we still get double-digit returns from the market? I would say definitely possible. If you are smart enough and can generate alpha, you can do slightly better than that as well. But definitely should not have expectations more than that. Some volatility is to be expected, and we should be trying to take advantage of that volatility rather than getting scared of it. Shallow in terms of correction, I think we have already corrected some 8-10% from the peak. Can it correct another 5, 7, 10%? I cannot rule it out just because we have the kind of returns we have had, and the valuations are a little on the expensive side. So with the slowdown and with the kind of valuations we are seeing, it's absolutely par for the course. So from the peak to correct around 15% kinds is, I would say. Markets last 3 years have done well, and the numbers are there. The kind of flows mutual funds are getting, all that is getting baked in. But we believe this is not the end of the story. This feels like this is going to have a long runway. We are still at about unique around 9-10 crore kind of demat accounts. I think that number has to swell to 20-25 crore by the turn of this decade, and that will mean the sustained growth. So there will be a lot more beneficiaries coming out of this sector, capital markets place. We like wealth managers, but there are other plays like exchanges, brokers, discount brokers, market infra companies. Those are all reporting good numbers. That should do well. We do like insurance as well. Insurance has had a bad 5 year. Of course, last 6 months have been good, especially on the general insurance side, because the competitive intensity has finally abated.
Okay, so that's a view coming in from Ravi Dharamshi. Pull up the stock of Dabur because the numbers are just out. The revenue from operations has come in at 3,028 crores versus 3,200 crore last year, but not very surprising because the street was penciling in a decline. So that is exactly how it's panned out. So on the top line, it's looking in line with expectation. Profitability was expected around 450 crore thereabouts. The actual profitability, however, has come in a little lower at 417 crores. So on the profitability bit, there seems to be a bit of a miss. Just trying to watch out for the numbers coming in as far as the EBITDA margin profile is concerned as well. The margin has declined by almost 200 basis points. The margin profile has come in closer to 18%, which is a tad bit better than what we were working with. So that's why the stock is a bit volatile. On the top line, it is in line with expectations. The margins also in line to a little bit better. Profitability is a smidge lower, but that could also be the case that there is some adjustment at Sectoral, or the taxes are on the higher side, and that's the reason we are seeing a bit of a miss on the bottom line, but overall a decent set coming in from Dabur. In fact, Sudip, what's your take on this entire staples basket? We saw the numbers coming in from Marico. That stock was higher 8% at the start of the trading session. Dabur, the number is just out. It's a bit sideways. Is it the right time to buy when there is when there is still a bit of a concern because you're getting it at a good price, or you would want it to play out and buy it after a couple of quarters?
This is probably the right time to start nibbling into some of these stocks. Dabur had already given a warning about the competitive intensity a few weeks back. So a little bit of subdued numbers were expected, and the numbers are by and large in line with the expectations. So I won't read too much into these numbers. But our belief is that Dabur will start recovering from the Q3 onwards. We have a festive season now, and then followed by Q4, which is normally strong on consumption of Dabur products because they have a large Chyawanprash portfolio, which gets more and more consumed during the winter months. So I believe that while the intensity in the soft drinks and the beverage segment is too much, and that's where Dabur will probably take some hits, the other segments will more than make up for the shortfall in the beverage segment. Thus, Dabur definitely at current level looks good from a long-term investor's point of view. Some of the other FMCG stocks also, like HUL, now it had gone up to 3,000. It has come to around 2,500 levels now. A little bit of correction here and there from a long-term investor's point of view, it will be a good buy. So FMCG, definitely it's worth dibbling into.
Sudip, good to have you on the show. We'll let you go on that note. Thanks as always for taking the time out.
If you like this video, then like, share and subscribe to ET Now.